The Federal Reserve has cut interest rates by 0.5%. This significant move ripples through the global economy. It impacts everything from mortgages to investments. This essay explores the rate cut's hidden consequences. Specifically, we will analyze its potential to reshape Bitcoin's future. Cutting rates can stimulate economic growth. It makes borrowing cheaper. This encourages spending and investment. However, it also lowers returns on traditional savings and investments. This sends investors looking for alternatives. This is where Bitcoin enters the picture. Bitcoin offers a decentralized and potentially higher yield alternative. Investors seeking to protect and grow their wealth are increasingly drawn to it. Understanding the Fed's rate cut requires understanding its connection to Bitcoin's future. The rate cut is not just a number, it's a signal. It suggests concerns about economic slowdown. This signals a potential shift in investor behavior. Investors may turn to assets like Bitcoin for stability and growth. The 0.5% rate cut has a significant impact on investors. Lower interest rates mean lower yields on traditional investments. This creates a dilemma for investors seeking to grow their wealth. Savings accounts and bonds, once reliable options, now offer diminished returns. Investors are now forced to search for yield elsewhere. This search leads them to consider riskier assets. These assets have the potential for higher returns. This is where Bitcoin comes into play. Bitcoin's decentralized nature and limited supply make it an attractive alternative. Investors see its potential for growth. They are willing to accept higher risk for potentially higher rewards. The rate cut has intensified this search for yield. This benefits alternative assets like Bitcoin. As traditional investment avenues become less appealing, the allure of Bitcoin strengthens. The 0.5% rate cut becomes a catalyst. It pushes investors towards higher risk, higher reward assets. A rate cut often signals economic uncertainty. When the Federal Reserve decides to lower interest rates, it is usually a response to signs of economic slowdown or potential recession. It indicates that the Federal Reserve is trying to stimulate growth by making borrowing cheaper, encouraging spending and investment. This can be interpreted as a lack of confidence in the current economic climate, causing investors to worry about the stability of their investments. This uncertainty pushes investors towards safe haven assets, which are considered more stable and less likely to lose value during economic downturns. Safe haven assets are expected to retain their value during market turbulence, providing a sense of security for investors. Gold has traditionally served this role, being a tangible asset with a long history of value retention. However, Bitcoin is emerging as a digital alternative, offering a new form of safe haven asset in the digital age. This is due to its unique characteristics. Bitcoin is decentralized, meaning it operates on a peer-to-peer network without a central authority. It is not controlled by any government or institution, making it less susceptible to political and economic influences. This makes it immune to many of the risks that plague traditional markets. Bitcoin is also scarce, adding to its appeal. Its supply is limited to 21 million coins, ensuring that it cannot be devalued by inflationary pressures. This finite supply protects it from inflation, a common issue with traditional currencies that can be printed in unlimited quantities. In uncertain times, Bitcoin's decentralized and scarce nature makes it appealing to those looking for a hedge against economic instability. The 0.5% rate cut adds to this appeal, highlighting the ongoing challenges within the traditional financial system. It underscores the potential risks in the traditional financial system, driving more investors to consider alternatives. This pushes investors towards the perceived safety of Bitcoin as they seek to protect their wealth in a sea of uncertainty. Section 4. Debasing the dollar. How rate cuts fuel Bitcoin's rise. Rate cuts can contribute to currency debasement, a process where the value of a currency decreases over time. When interest rates are low, borrowing becomes cheaper, making it easier for individuals and businesses to take out loans. This encourages more borrowing and spending, which can lead to an increase in the money supply as more money circulates in the economy. An increased money supply can lead to inflation, where the prices of goods and services rise. Inflation erodes the purchasing power of a currency, meaning that each unit of currency buys fewer goods and services over time. This means that it takes more units of currency to buy the same goods and services, making everyday items more expensive. This is where Bitcoin's appeal as an inflation hedge comes in. Bitcoin's supply is limited to 21 million coins. It is not subject to the same inflationary pressures as fiat currencies, which can be printed in unlimited quantities. This makes it an attractive option for investors seeking to preserve their wealth and protect against inflation. The 0.5% rate cut by the Federal Reserve reinforces this narrative, signaling potential future inflation. By potentially fueling inflation, the rate cut could drive investors towards Bitcoin as they look for safer investment options. They see it as a way to hedge against the eroding value of fiat currencies, providing a store of value. This is a key factor driving Bitcoin's growing appeal in the wake of the Fed's decision, as more people seek to protect their financial future. Section 5. Liquidity floods the market. Bitcoin rides the wave. The Federal Reserve's rate cut injects liquidity into the market, aiming to stimulate economic activity. Lower interest rates make it cheaper to borrow, encouraging both businesses and individuals to seek loans. This encourages businesses and individuals to take on more debt, fueling spending and investment. This influx of money can have a significant impact on asset prices, driving them higher. As liquidity increases, the demand for assets rises, creating a more dynamic market environment. This includes traditional assets like stocks and bonds, but also alternative assets like Bitcoin, which are gaining traction. With more money in circulation, investors have more capital to deploy, seeking higher returns. This can push up the prices of assets across the board, creating a bullish market sentiment. Bitcoin, with its limited supply and growing mainstream acceptance, is well positioned to benefit from this increased liquidity, attracting more investors. The 0.5% rate cut acts as a catalyst, setting off a chain reaction in the financial markets. It injects more money into the system, creating a more favorable environment for assets like Bitcoin to appreciate in value as investors seek alternatives to traditional investments. This surge in liquidity can create a ripple effect, impacting various asset classes, including Bitcoin, and leading to interconnected market movements. The 0.5% rate cut, by increasing liquidity, indirectly supports Bitcoin's price growth, making it an attractive option for investors looking to diversify their portfolios. Section 6. Bonds falter. Bitcoin rises. A tale of two assets. Bonds are traditionally considered safe haven assets. They typically offer a fixed return. However, their appeal diminishes in a low interest rate environment. Lower interest rates translate to lower bond yields. This makes them less attractive to investors seeking stable income. This shift away from bonds creates an opportunity for alternative assets. Bitcoin, with its potential for growth and its uncorrelated nature to traditional markets, stands to benefit. As bond yields decline, investors seeking higher returns may turn to Bitcoin. The 0.5% rate cut further exacerbates this trend. It pushes bond yields even lower, making them even less attractive. This creates a vacuum that Bitcoin is primed to fill. The relationship between bonds and Bitcoin is becoming increasingly relevant. As the appeal of bonds diminishes, Bitcoin's attractiveness as an alternative investment strengthens. The 0.5% rate cut reinforces this dynamic.